We're coming back towards the breaking news as we speak. Nigeria's Bureau of Statistics has released its first quarter GDP numbers showing Nigeria's economy contracted 0.52%. You can see that graphical illustration there provided by MBS. Thank you, folks, for that infographics. You can see the numbers and read that for yourself. So for the first quarter, the first 3 months, January to March, we're down 0.52%. But if you look at where we were in the fourth quarter of 2016, we were negative 1.73%. That means that even though there was a contraction of about 0.5%, we were better about 1.21% better than we were in the fourth quarter of 2016. In real terms, how did we do? We recorded a real GDP of 18.3 trillion naira in the first quarter of this year. That's lower than 26.028 trillion naira we posted in the fourth quarter of last year. So in real GDP terms, we went down, and that's the reason. You can see the GDP Q1 2017 report, and you can see all the infographics there, and you have all the day to digest those numbers, and that's what we are also digesting here on the program for you. Breaking it down, real growth of the oil sector slowed 11.64%. These numbers show that the oil sector contributed 8.9% to the GDP, to the real GDP in first quarter, first 3 months of this year. That's what we call the Q1. Oil production averaged 1.83 million barrels per day. That's about 0.07 million barrels higher than the average in the fourth quarter of last year. Oil production during the quarter was, however, lower by 0.22 million barrels per day relative to the corresponding quarter in Q1 of 2016. So we got a lot to talk about. Non-oil sector, I need to bring that out there. We need to show this out. The non-oil sector was up 0.72% in real terms. So how do all of this? Let's get one of the investment analysts and economists at Financial Derivatives company here in Lagos to talk to us. Today's other economy is live here in the studios with us. But don't forget, we expected the Statistician General, Dr. Yemi Kale, in our Abuja studios within the hour to put some flesh behind this very important data that we have on our hands this Tuesday, a decision day for the Central Bank Monetary Policy, concluding their two-day meeting this afternoon, 2 o'clock local time. We'll be live all over that past lunchtime. Don't forget that. Ada, good morning.
Good morning.
Thank you. This is data gets all of us crazy. If we're economists, you're an analyst, once data hits the button, the wire, we all jump up and down. So give us your reading as far as this latest GDP is concerned.
Well, the Q1 17 GDP figures came in much lower than most analysts anticipated. That shows that is a slow and tepid recovery, and we are moving in the right direction. That means, it seems like the recovery that we expected is going to take much longer than we anticipated. And if you look at the figures, Q1 2017 oil production was marginally lower compared to what it was in Q4 17 and Q4 16. However, oil prices were higher in Q1 17 compared to Q4 2017. So, and Q4 2016. So, we haven't digested the figures just yet. But the good news is that we're slowly coming out from a recession.
Yeah, so we're slowly coming out of recession, and you're sounding like Dr. Ogokiti here, who says, well, it looks like we're slowly coming out of recession. Well, this shows that, yes, we still have a bit of a very testing grounds, as it were, on our hands, starting the new year. So how do you put this together, this data, some forecast whether we're going to do a positive 0.5%, now we're doing a negative 0.5%. So what's driving the current commodity prices looking at the first quarter now in the second month of the second quarter?
Okay. Now, going back to recession, it's very important to note that 2 consecutive periods of growth, or 2 consecutive periods of GDP growth means that we're finally out of a recession. However, coming back to commodity prices, we're seeing that despite the fact that there's been inflation has been declining, food inflation has actually been going up, and core inflation is actually coming down. But then a lot of people are quite confused if there's been some sort of a dollar supply, if the dollar supply is increasing, if the exchange rate has, appreciated compared to what it was in the beginning of the year, how come food prices are still not coming downwards? What we see in the market is that a lot of traders have not completely sold off the stock at which they purchased a higher dollar at. So what we're doing now, they're selling off old stock. So if they eventually go to source for dollar at the current rate, we'll begin to see that translate into prices. So the pass-through effect hasn't, gone down to prices of commodities just yet.
The pass-through effect is going to happen not anytime soon.
The pass-through effect, so far so good. If you look at from February 20th till now, towards the second half of Q1 17, we've been seeing improvements so far. That is when the exchange rates, the forex intervention started. That is when we saw PMI spike to figures, which means that the sort of manufacturing activities are actually picking up. That's where we saw the exchange rate, like I said earlier, appreciate. Our production are actually back up to 1.4 or 1.5, although it was at 1.4 when we had all this false planned schedule maintenance from oil companies. But so far so good. From mid-February to now, we're seeing improvements in a lot of economic data, and we believe that may translate into positive, better figures for Q2 17.
It will be very important. Central bank decision as far as the interest rate, liquidity ratio, cash reserve ratio, public and private sector both sides are very, very important. Again, the considerations of how they arrive at those decisions that will be out in a couple of hours from now. What's your take on this? What's the take of you and your team at FDC?
Well, the central bank, the Monetary Policy Committee, their main objective is price stability. So now, they have to obviously monitor inflationary trend and the stability of the exchange rate. So we think that they're going to still maintain status quo and watch how, the developments that are going on so far. But however, since the GDP figures came in lower than anticipated, there may be pressure to reduce MPR to somewhat stimulate economic activity from within. But the general consensus is that they may still maintain status quo to see what so far the positive development in the second half of Q1 will fit into the economy going forward. So
when the Central Bank Monetary Policy Committee do nothing, well, to everyone it looks like nothing is really happening. So, we might just shrug it off. Should we shrug it off? Will the market shrug off a do-nothing MPC today?
Well, that is the most likely scenario right now. They'll have to maintain status quo. The GDP figures have come in, so they will have to use that. And there's going to be a lot of consideration as well. The OPEC meeting is coming up